Welcome back to the Dividend Diplomats YouTube channel. You've got Bert, the Hurt, Lanny, Too Manny, your boys, the Dividend Diplomats, the 1-2 punch. And guys, we're here to talk to you about two more dividend stocks as we close out June and we are heading into July.
Smash the heck out of that subscribe button, everybody. Give us a thumbs up. Come on, everybody. Let's go. Let's get to 20,000 subscribers. Okay, let's get to 15,000 first, but then let's get to 20,000 subscribers. And in this video, to Lanny's point, we're going to talk about two potential stocks. And you know what, Lanny? I'm going to throw a curveball out there for you. If this video gets to 500 likes, are we going to buy one share each of these two companies?
I'm game, guys. I am game. We haven't done this one in a while. It's been a few months. If we do get to 500 likes, we'll buy a share each of these companies. Okay, I'm in. I'm in, Bert. Let's play.
Yeah, come on, everyone. Let's get us to 500 likes. Why not? Because we love these companies. We own both the companies already that we're going to feature here in this video. So that's going to be what's fun.
And Bert, let's jump in right now. I mean, obviously the stock market's where it's at. It continues to trend down as we record this video on June 28th. Only a few days left here for the month. S&P 500 down another 80 points today, cracking again below 3,900, treading just above 3,800 in the S&P 500.
I didn't get a chance to follow the market today. I had no idea this happened. That just completely blew my mind that the market was down 2% today. That's what's fascinating. Yeah,
I think it started out in the green. Yeah. You're like, oh, I'm cool today.
Yeah, that's probably, you know what? That's exactly what happened. Saw green, turned it off, turned my mind somewhere else, and then I'm just, what's going on? But that's been the story of the market here in 2022. It's hard to build consecutive green days just, to get some momentum. And in fact, market's down almost at 3,800, just above it. It's a crazy year as we finish out the first half of 2022.
But hey, for dividend investors, the market might show red, but dividend still flows, and dividend increases haven't been stronger than they have been right now this year. I mean, I know for the Vanguard investors out there, you're all probably looking at your ETFs and mutual funds, seeing nice dividend increase pops from Q2 2022 versus Q2 2021.
Yeah, it's insane. Once again, Vanguard's delivering strong returns. I mean, it's great. That's kudos to you, Annie. I mean, nobody should be happier about the Vanguard dividend increases than you, considering your VYM purchases and your recent VOO ones as well.
Hey, I'm all in, baby. But to bring it back here, if you haven't caught the last video here on Altria Group, obviously, Bert ripped out a nice video, ticker symbol MO on that, yielding over 8% for this SIN stock. So take a look at that. We also published out two more stocks on Sunday last week. So we're going to keep cranking out more stocks as we find value. And Bert, here are two more stocks.
Yeah, and how do we find the value in those stocks and the ones today and all the other ones? Using our stock screeners, three simple metrics: PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing those dividends, and then you get that bonus metric, the dividend yield. So Lanny, let's jump right in here. What company is number one on this beautiful watch list?
Let's turn on the Godfather music for you, WWE style, and hop on the Norfolk and Southern train, ticker symbol NSC. Chug it, chug it, chug it, chug it, chug it, chug it, chug it. So guys, Norfolk Southern, we don't really talk about this stock too much on our channel. In fact, when we get into the third dividend stock metric, that's probably the only time we've ever really featured them during one of those videos. But Bert, tell me about Norfolk right now.
Well, the railroad sector is interesting. I know we both purchased railroad stocks. This was what, 5+ years ago, Lanny, when the railroad sector was just
10 years ago, I feel like. My God.
Yeah, I can't remember the exact period. Someone can tell us in the comment section below when it happened. Railroad stocks fell off of a cliff. They froze their dividends for a little bit. It was a tough sector and a tough time. So that's when we grabbed Norfolk Southern, added it to our portfolio. And yeah, those dividends have come roaring back over the last 5 years, Lanny. Zooming it out on Google Finance, 5 years ago, Norfolk closed at 121.70, and today it's closed at 226.39.
So guys, they've come up and they've also come down because they're down about 23% in the last 52 weeks, which means it's time to look at this stock to see if this is a great stock to buy. Because guys, this is a dividend growth stock that not only pays a decent dividend yield, but grows their dividend at an alarming rate, especially recently. And we'll get into that.
Yep.
So guys, trading at 226.39, that first metric, that price to earnings ratio, showing you if it's under or overvalued. Typically, we like it under 18 to 20 times earnings. S&P 500 is about 20 times, so we use that as the benchmark. Norfolk's analysts are expecting $13.86 this year, and well over $15 plus in 2023, but we're using the 1386 and trading at 226.39. That P ratio is a nice sound 16.33.
Not the cheapest, but still undervalued compared to the market, and that's what we like to see. Let's move into that second metric, dividend payout ratio. Annual dividend today, $4.96. Divide that by the 1386. 35.79% payout ratio.
And that means plenty of room to keep growing the dividend, and there's safety in the dividend. Plus, they're keeping earnings back for the business, maybe to buy a couple more, trains, maybe to get a little bit more efficient on the tracks, as their pricing's probably higher. It depends if they're hydro or coal-based. But let's get into that third metric, the dividend growth rate. Now, Bert, I want you to take this one because this one is just too sweet.
Yeah. So the fun thing about Norfolk Southern and so many of the other railroads, they don't just announce their dividend once per year, they announce it twice per year. And as we featured on our blog in a recent article, go check the blog out to see the dividend increase is expected in July. Norfolk Southern is expected to announce that second dividend increase here. January, they already announced a nearly 14% dividend increase.
Right. Now, that was pure coincidence, too, that I picked this stock to talk about.
Yeah.
Now, knowing that, they were on that article that you cranked out.
Yeah. No, I mean, it's a great sector. That's what's fun about the railroads. So let's see if they can announce another double-digit dividend increase to just keep the momentum going. So let's see, everybody. That's what's fun about this sector. Their 5-year average dividend growth rate, 14.46%, and they have increased that dividend every year since they got out of that freeze 5+ years ago.
5+ years, well over a double-digit inflation. Kiss my what. Right now they are just, not to say firing on all cylinders, but they are really chugging along here on the dividend growth.
All right, let's go to the bonus metric there after that one here. Their yield is 2.19%. So it's an increase compared to the market, which is great, and still above the high yield savings account. Although, as we also talk about on our blog, Lanny, we're seeing those high yield savings account interest rate climb. Just got that notification SoFi is going to 1.5%. Cha-ching.
Yep. And, I'm sure a lot of the banks and credit unions are trying to get ahead of the end of July interest rate hike that's coming. So they're trying to pull you in now, versus, later. So the yield's higher than the S&P 500, higher than your online savings account. And the income stream is growing at a 14% rate. Last year alone in 2021, the dividend grew 16% from the 2 raises. So guys, they already increased it over 13% in Q1 this year. We'll have to see what they do coming in, hopefully July.
Why they earned a spot on your watch list. Let's move into that second company here. I know. I love it. They're not headquartered in Ohio, but you got to call the shot out because they're making a massive investment into the state of Ohio, heading down to Columbus, Ohio, building that brand new $20 billion plant. That is so great for the state of Ohio. Everybody, big smiles here. That company is Intel, ticker symbol INTC.
Now, I know that the CEO of Intel, did call Ohio because there's a little bit of a delay and they're kind of pointing their fingers at the government on the delay and what they're trying to do in Ohio. And I think that really caused, obviously, they want to build so they can help produce more. So the delays there really sent the stock price down. Guys, $37.78. This stock's getting crushed this year, down essentially 30%, over 30% in the last 52 weeks. It's just red for Intel. Bert, what's the analyst looking like? What's that first metric?
$3.49 is what they're projecting EPS to be. So that gives you a PE ratio at their current price of 37.78 of 10.83. Yeah, stock price is definitely down well over 10% right now since we were buying them in the low 40s.
I mean, it might not be a bad time, as we'll get into, to maybe chip in one more share if you want at these prices. We'll have to talk about it at the end. Second dividend metric, the payout ratio. Guys, they pay $1.46 spread over 4 quarters. That's a 41.83% payout ratio, in that sweet spot. Mr. Perfect, toothpick flicking, razor Ramoning over here. That's a pretty good payout ratio.
Their 5-year dividend growth rate is 6.26%. And they've increased that dividend for 7+ years too. So solid dividend history, working their way towards that double-digit streak and then eventually becoming that dividend aristocrat.
And guys, the dividend yield right now on Intel is going to be a lot higher than Norfolk's 2.19%. They're trading almost double, but they're at 3.86%. So definitely about closer to 3 times the S&P 500, but really close to that 4% threshold on Intel.
Yeah. And I mean, yeah, year to date, getting crushed, down 29%, 52 weeks down 33%. Not a great year for Intel. Still dealing with, to your point, what you mentioned, supply chains, that Ohio announcement, despite the fact they made the announcement and they're running into those headwinds. Their big issue was they were going to address that supply chain issue. And if they're running into delays on how they're going to produce them domestically, like you pointed out, Lanny, which is so huge, of course, they're going to keep running into some of these major headwinds.
You know, we'll display both stocks here on the screen. You know, 2 different industries here. You got the transportation with the trains, and you got the technology with Intel.
I'd say they're 2 different industries.
Yeah. Let's hope one is not trying to transition, because I would say both are pretty costly to try to switch.
Yeah. So what are you thinking here, Lanny, between the 2 companies? Besides for the fact that we're going to get to 500 likes on this video and we're going to both have to buy 1 share of each company, are you going to be buying any additional shares to those 1 each?
You know, it's hard to not just buy 1 more share of Intel at the price of 37.78, because I really don't think they're going anywhere. But again, you got to be aware of the value trap. If you don't have any transportation, no train in your portfolio, and you're an individual stock investor, Norfolk at the price, it's not a bad entry point to grab 1 share around this price. You know, I already have a pretty large position, so I'm probably going to be watching Norfolk and interested in buying maybe 1 share of Intel. But if Norfolk drops, I don't know, maybe in the under 220 range, I'm a little bit more interested. Maybe 215, a little bit more interested.
So there we have it. Lanny's going to keep a close eye, maybe buy Intel more likely than buying Norfolk. But if Norfolk keeps dropping, it'll be hard for Lanny to resist. Let us know in the comment section below what you think of Norfolk, what you think of Intel. And again, everybody, remember, help us get to 500 likes on this video so we can both buy 1 share each. And we're going to post it once we do to prove it, because we're going to put our money where our mouths are.
Yeah, Bert said it there, guys. Let us know what other stocks you're buying right now. Are you staying away from Intel? Do you think it's a value trap? We want to know in the comments what you're feeling about that, as well as what you're doing to battle the rising cost, aka inflation. Guys, if you haven't already, again, subscribe to the channel, give the video a thumbs up. That's your boy Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.